Let's continue with bank reconciliation statement. In the first session on bank reconciliation statement, I had explained what is a bank reconciliation statement and why is it prepared. Now let us look at the causes of disagreement. The causes of disagreement between the two balances, that is balance as per the cash book and the balance as per the bank passbook, right? So let's look at this now. Causes of disagreement or items causing the disagreement between the two balances. Now let's take up the items which generally cause the difference. The first one, bank charges. The bank generally charges some money as bank charges for rendering some services, right? And whenever the bank takes these charges, it debits the customer's account immediately, but the customer may not know about how much bank charges have been deducted and when the bank has deducted that. So obviously the corresponding entry for that bank charges will not be shown in the cash book unless and until the customer has been intimated about the same or he gets the copy of the passbook, right? So the bank charges can result in a difference between the two balances. Now I'll write it down here. These include bank commission or other charges for the collection of outstation checks or bills or some other services rendered by the bank. These bank charges are debited in the passbook but not entered in the cash book until intimated to the depositor through correspondence or passbook, right? So this is bank charges, so this can lead to a difference in the two balances, right? Now the second one is the bank interest. The bank interest. The interest allowed by the bank on deposits or charged on overdrafts. There can be two kinds of bank balances. One is when you have money in your bank, that is a normal bank balance that you have. So in that, the bank gives us some interest, that is the interest allowed by the bank. And if you have a negative balance, it's called a bank overdraft basically, where the companies have an overdraft facility. So there it is a negative balance there, fine. So in that case, the bank will charge interest, right? So interest is charged on overdrafts, whereas interest is given on the positive balances that we maintain in the bank, right? The interest allowed by the bank on deposits or charged on overdrafts is shown in the credit side or debit side. If it is the interest allowed by the bank, it is shown in the credit side because that is the amount which is given to the customer. If it is interest charged on overdraft, it is debited to the customer's account, right? So it is shown on the debit side. So here is shown in the credit side or debit side of the passbook, but not recorded in the cash book until the intimation or passbook is supplied by the bank, right? So the bank knows when it has given the interest or when it has charged the interest. So on the same date, it will credit or debit that interest, but the customer will not know of that unless and until he is intimated about the same, right? So this again leads to a difference between the two balances. Fine. Now the next one, interest on dividends, securities, etc. Right? If the interest on dividends, securities, etc. are collected by the bank directly, right? I'll put it this way: collected by the bank directly are credited in the passbook, are credited in the passbook, but not entered in the cash book. Again, the same reason why, because the bank has collected these interests directly, right? And unless and until the bank intimates the customer that we have collected this much interest or on dividends or securities, the customer doesn't know when exactly the interest had been received. So he can't make the entry in the cash book, right? So again, the bank balance will be more, but the balance as per the cash book will be less, right? Now, the next one, amounts or checks directly paid into the bank, paid into the bank by the debtors of the business, but not intimated, but not intimated or intimated later than the reconciliation date. This is again similar to the earlier point. If there is a debtor of the business and he pays the check directly into the bank, right, rather than giving it to the customer, he pays it directly to the bank, right? So in that case, the same will not be shown in the cash book unless and until the business comes to know of that, right? So till that point of time, there will be a difference between the two books, fine? Then checks paid into the bank but returned dishonored. When the checks are paid into the bank but returned dishonored, they will be debited in the passbook because they have come back, the check has been dishonored, so they will be debited in the passbook, but the same will not be given any effect in the cash book unless otherwise intimated, right? Then you see this: bills of exchange collected or paid by the bank for its customers. So again, if it is done directly by the bank, then the customer will not know when it has been done. So obviously it will not be reflected in the cash book. Fine. Okay, now checks received and entered in the bank column of the cash book but omitted to be paid into the bank, right? So this is, you have received a check, and as soon as we receive the check, we enter it in the bank column of the cash book, but it has not been paid into the bank. So unless and until it is paid into the bank cannot make an entry. So in the cash book, the balance will be more because we have already shown the checks as received, but it has not come into the bank actually, so the balance will be less there, right? The next point, checks paid into the bank for collection. Checks paid into the bank for collection, but not yet entered in the bank passbook, right? Checks paid into the bank for collection. Now, supposing one of our debtors has given us the checks, so we have received the checks and sent it to the bank for collection, right? So here I'll write it down so that it becomes more clear. The checks received from the debtors are sent to the bank for collection, and these are generally entered in the bank column of the cash book on the date they are sent to the bank, or even on the date they are received. So as soon as we receive the check, we generally put it in the bank column of the cash book, right? But the checks so deposited might not have been collected by the bank, especially the outstation checks. It takes time for the outstation checks, right? So especially the outstation checks, and thus are not entered in the bank passbook, right? So till the time the checks are collected, the bank cannot make an entry. So only when they collect the check, then only they can make the entry. So till that date, there will be a difference between the balance as per the cash book and the passbook, right? Okay, now the next one, checks drawn and issued to the creditors but not yet presented for payment until after the date of reconciliation. Whatever we are doing here, this is basically up to the date of reconciliation. So up to the date of reconciliation, a check has not been collected means there will be a difference, right? So after that date, the check is collected, obviously that entry will be there. But as on that date on which we are preparing the bank reconciliation statement, on that day we are looking at the differences, right? So here, this point, checks drawn and issued to the creditors. We have issued a check to the creditor, but the checks have not yet been presented for payment, right? So what does that mean? Whenever we issue checks to the creditors, these checks are immediately entered in the bank column of the cash book, right? Suppose I issue a check to someone and that person, he keeps the checks with him for, let's say, 10 days, and on the 11th day he is presenting, he is putting that check in the bank. So obviously the check has not been presented as yet for payment, right? So the check is presented for payment, and after that it might take 2 days for the collection process. So in that period of 10, 15 days, whatever, there is a difference between the bank passbook balance and the cash book balance, right? So these checks are immediately entered in the bank column of the cash book, but the banker will debit the customer's account only when the checks are actually presented by the creditor to them, right? So till that time the bank cannot make an entry. So till that time there will be a difference, right? Then errors in the cash book and or bank passbook. There can be some erroneous entry, right? So because of which the balances in both the books are not tallying, right? This is one point here. So this one is the other point. Checks drawn and issued, uh, and then errors in the cash book or the bank passbook, right? Sometimes we also direct the bank to pay our insurance premium or electricity bills or telephone bills directly, right? Okay. So even in that case, there can be a difference because the bank is paying the amount directly, so it will immediately debit that amount, right? But we do not know when the bank has paid it. So till the time we get the intimation that the bank has paid these amounts, we cannot put it in the cash book. So till that time there will be a difference between the two. So these are some of the entries, most common entries, which basically cause the disagreement between the bank passbook balance and the cash book balance, right? So when we take up the different cases under which we prepare the bank reconciliation statement, we have to understand all these causes of disagreement and accordingly do the accounting entries for them, right? So I hope you have understood all the causes of disagreement which we have done in this session. So with that, I come to the end of this session. In my next session, I'll take up a small question on how to prepare a bank reconciliation statement, and I'll show you the format of a bank reconciliation statement.